If you've deposited more than $10,000 in cash at your bank this year, the federal government already knows about it. That's not a rumor. Banks are legally required to file a report on any cash transaction over $10,000 every single time, no exceptions. Now, in 2026, a second layer has been added on top of that old rule. Are new state laws and bank policies that let your bank freeze your account first and explain later if their system decides something about your activity looks wrong. And if you're over 65, the rules are even more aggressive. I want you to really sit with that for a second, not because I want you to panic, because I want you to understand exactly how this works so it never catches you off guard. My name is Mason Parker. For over a decade, I have studied retirement benefits, senior tax programs, and the financial rules that affect seniors every single year. I've watched these banking rules change more in the last 18 months than in the previous 10 years combined, and almost nobody explains them in plain English. That's what we're doing today. Before we go further, if you haven't already, hit that subscribe button. Rules like this change quietly, sometimes with almost no news coverage, and this channel exists to translate them into plain language before they catch you by surprise. Next week, we're covering something just as important, a new Social Security overpayment clawback rule that's already taking bites out of people's monthly checks. You will not want to miss that one. Okay, let's get into it. I'm going to walk you through 4 things that can freeze your account, how each one actually works, and exactly what to do if it happens to you. Number 1, the $10,000 rule nobody explains correctly. Here's the part almost everyone gets wrong. Depositing more than $10,000 in cash is not illegal, and it does not put you on a watch list. Under federal law, specifically Title 31 of the U.S. Code, banks simply have to file what's called a currency transaction report, or CTR, anytime you deposit or withdraw more than $10,000 in cash. That report goes to the Financial Crimes Enforcement Network, known as FINRA. It's paperwork. It is not an accusation. Here's where it turns into a real problem. Some people hear about the $10,000 threshold and think they're being clever by breaking a large deposit into smaller chunks, $9,000 one day, $8,000 a few days later, specifically to avoid triggering that report. That's called structuring, and I want to be very direct with you. Structuring is a federal felony under 31 U.S. Code, Section 5324. It doesn't matter if the money is completely legal. It doesn't matter if it's your own retirement savings, an inheritance, or money from selling a car. The law doesn't care where the money came from. It cares whether you tried to dodge the reporting requirement. And here's the twist that surprises people. Breaking deposits into smaller amounts often looks more suspicious to a bank's monitoring system than just depositing the full amount honestly in the first place. Let me give you an example. There was a retired teacher, I'll call him Harold, from a small town in Ohio, who sold a used truck for $12,000 in cash. A neighbor told him that anything over $10,000 would flag him with the IRS, so Harold deposited it in 3 smaller amounts over 2 weeks, trying to stay under the radar. Instead, the bank's fraud system flagged the pattern immediately, and his account was frozen for review. If Harold had just walked in and deposited the full $12,000 at once, the bank would have filed a routine CTR, and nothing else would have happened. So here's your action step. If you have a large legitimate cash deposit, an inheritance, a settlement, proceeds from selling property, just deposit it. Don't split it up. If you're nervous, you can even call your bank ahead of time and let them know what's coming and why. That single phone call, giving them context in advance, does more to protect you than any amount of trying to stay under a threshold. Number 2, the report your bank can legally never tell you about. This is the one that confuses people most, so I want you to really listen here. Separate from the $10,000 cash rule. Banks are required under the Bank Secrecy Act to file something called a Suspicious Activity Report, or SAR, whenever their systems flag a transaction pattern that looks unusual, regardless of the dollar amount. This could be a sudden change in your typical spending, a large transfer to someone you've never sent money to before, or activity that just doesn't match your normal pattern. Here's the part that catches people off guard. By law, your bank is prohibited from telling you if they filed a SAR on your account or even confirming that one exists. So if your account gets frozen and the branch employee just keeps saying, "We can't discuss the specific reason," that's not them being difficult. In many cases, they are legally not allowed to tell you. I want to ask you something in the comments below because I genuinely want to know. Has your bank ever frozen a transaction on you with little to no explanation? Tell me what happened and how long it took to resolve, because your experience might help someone else watching this video avoid the exact same situation. Now, in cases like this, your action step is simple, even though the situation feels frustrating. Don't argue with the branch staff. They usually have no more information than you do. Instead, ask them directly for the compliance or fraud department's process for review and ask what documentation would help close it out faster, like proof of where funds came from. Most holds tied to a SAR resolve once the bank can confirm the source and purpose of the money in question. There's a third category, and this one specifically targets people over 65, and I'm going to walk you through exactly how it works, plus what you need to set up on your accounts today to protect yourself from it. That's coming up right after this. Number 3, the rule that specifically targets people over 65. This is the one I most want you to understand because it's newer, it's spreading fast across the country, and it's designed specifically around your age group. Under FINRA Rule 2165, that's the Financial Industry Regulatory Authority, brokerage firms and many banks now have explicit legal authority to place a temporary hold on a disbursement from the account of what the rule calls a specified adult, which generally means anyone 65 or older, if they have a reasonable belief that financial exploitation may be happening. Reported hold periods under this framework commonly run up to 15 business days, and in some cases, if the institution reports the matter to Adult Protective Services, that hold can be extended further while the investigation continues. I want to be fair here. This rule was not written to punish you. It was written because financial exploitation of seniors is a massive and growing problem, and for years banks were hesitant to freeze anything because they were worried about being sued for holding up a legitimate transaction. Lawmakers gave banks what's sometimes called safe harbor protection, meaning the bank generally can't be sued for delaying a transfer in good faith, even if it turns out there was nothing wrong at all. That protection is exactly why banks have gotten so much more aggressive about freezing first and asking questions later. Here's what triggers it in practice: a sudden large transfer that doesn't match your normal pattern, a transfer to someone you've never sent money to before, especially overseas, frequent late-night account logins, or, and this one catches a lot of people off guard, being on the phone with someone while you're simultaneously logged into your banking app, which is a common pattern in tech support and romance scams. So some monitoring systems are specifically trained to flag it. Now, here's your action step, and I want you to actually do this, not just make a mental note. Every major bank and brokerage firm now allows you to designate what's called a trusted contact person under FINRA Rule 4512. This is someone, a son, a daughter, a close friend, who the bank is allowed to call to simply verify that you're safe and that a transaction is legitimate if something looks unusual. It costs nothing. It takes about 5 minutes, and it can be the difference between a 15-day freeze and a same-day phone call that clears everything up. Call your bank this week or ask next time you're in a branch and say the words, "I want to add a trusted contact person to my account." If you have a large transfer coming up in the near future for something like a real estate closing, a big gift, or paying for a family member's expenses, consider calling your bank 48 hours ahead of time to let them know what's coming. Giving them context in advance is right now the single best defense against getting caught in one of these holds. Before I go to the next one, if this video is helping you make sense of all this, hit that subscribe button now. I release a new one of these every single week, and this channel is entirely about cutting through confusing rules like this one so you're never caught off guard. Number 4, the freeze that has nothing to do with fraud at all. This last one isn't about AI monitoring or elder protection laws. It's older and in some ways more serious. If a creditor sues you and wins a judgment against you in court, that creditor can get a court order requiring your bank to freeze your account. This is completely different from a fraud hold. The bank isn't choosing to do this. They're legally required to comply the moment they receive that restraining notice. And by law, they often have to freeze the account immediately, before they're even allowed to notify you. Let me give you an example. There was a woman, I'll call her Delores, from a suburb outside Phoenix, who had an old medical bill go to collections years earlier. She never received notice that she'd been sued over it, and one day her debit card simply stopped working. The bank had received a court order and had no choice but to freeze the account first. Here's what matters most if this happens to you. In most states, a certain portion of the money in your account is automatically protected from this kind of freeze. Often things like Social Security payments, which are federally protected from most creditor garnishment regardless of which state you live in. The specific dollar amount of additional protected funds varies quite a bit by state, so this is genuinely a check your local rules situation rather than one size fits all. Your action step: if this happens, go to your bank immediately and ask specifically about your state's exemption paperwork, sometimes called an exemption claim form, and ask whether your frozen funds include Social Security or other federal benefit deposits, since those often have to be released even when the rest of the account stays frozen. Now, because everything we've just covered involves fear, urgency, and your bank account, I have to talk to you about something else: the people who figured out how to turn this exact fear into a scam. This next part might be the most important few minutes in this entire video, because scammers are now specifically pretending to be your bank, calling you about a frozen account to get you to hand over the very information that would let them empty it for real. Here's exactly how the scam works. You get a call, a text, or an email claiming to be from your bank's fraud department. They tell you your account has been frozen or flagged for suspicious activity, which sounds believable because we've just spent this whole video talking about how real that is. Then they create urgency. We need to verify your identity right now or your funds will be permanently locked. Then they ask you to confirm your account number, your online banking password, a one-time verification code, or to move your money to a safe account that they control. Here are the red flags, and I want you to actually remember these. First, real banks do not call you and ask you to confirm your full account number, password, or a one-time passcode over the phone, ever. Second, legitimate fraud alerts almost always come through your bank's official app or a number you dial yourself, not a link in a text message. Third, any request to move your money to a safe account is not a real bank procedure. No legitimate institution has ever asked a customer to do that. And fourth, the most important rule I can give you in this entire video: the real agency or bank never calls you to verify your account. You call them using the number on the back of your card. They don't call you first and ask you to prove who you are. If you ever think you're being targeted, hang up and call your bank directly using the number on your card or statement. If you believe you've been scammed or want to report a suspicious contact, you can reach the Federal Trade Commission at ftc.gov/complaint or by phone at 1-8773-824357. If the situation involves someone claiming to be from Social Security or trying to access retirement benefits, the Social Security Administration's Office of Inspector General Fraud Hotline is 1-800-269-0271. Let's bring this all together because I've thrown a lot at you today. Number one, the $10,000 cash rule is just paperwork, but breaking deposits into smaller amounts to avoid it, structuring, is a federal felony. Just deposit it honestly, or call your bank ahead of time if it's a large amount. Number two, banks file suspicious activity reports and are legally barred from telling you about them. If you're frozen with no explanation, ask for the compliance review process, not an explanation you won't get. Number three, under FINRA Rule 2165, banks can hold disbursements from accounts of people 65 and older for extended review. Your defense is simple. Call your bank this week and add a trusted contact person under FINRA Rule 4512. Number 4, a court judgment can freeze your account with no advance warning. If it happens, ask about your state's exemption form immediately, especially for protected income like Social Security. And always remember, scammers exploit fear about frozen accounts. You call your bank. Your bank does not call you to verify your information. Here's the truth underneath all of this. These rules exist because the system is trying to protect people, but the system doesn't know your life, your habits, or your intentions. It only knows patterns. The best protection you have isn't luck. It's knowing the rules before you ever need them. If this video helped make sense of something confusing, hit that subscribe button and tap the notification bell so you don't miss next week's video on the new Social Security overpayment clawback rule. And do me one favor. Share this with one person you know who's over 65 or who receives Social Security. This is exactly the kind of thing that helps someone the most before it happens to them, not after. I will see you in the next one.